Hello everyone, I am Nilesh Jain and welcomes you all in today's video where we will be talking about tax planning for salaried individuals and focusing on the practical strategies. My agenda is not to overwhelm you with the long list of benefits. Instead, I will put efforts to provide you with the well-crafted plans that maximizes these benefits to your advantage. I will be sharing few strategies and their order of preferences which personally I follow and would recommend if asked for. Today, our focus is about discussing the old tax regime. Assuming that you have already done your basic math and decided that old tax regime suits you the best. Now, let's understand the basic overview format of how the tax is calculated and take you to the walk on the 4 basic pillars that help you on smart tax planning. As of now, you just have an eye on the screen where a format is shown as well as the 4 pillars of smart tax planning has been listed down. Gradually, as we proceed with our video, you will understand everything step by step. Let's get started and learn how these practical acts can make real difference to you. So the first pillar of tax planning is exemption. The first step in tax planning is to understand that all the components appearing in payslip are not taxable, provided that you are proactive and take necessary steps before it's too late. We need to actively opt this by clearly communicating it with HR or the other concerned person about our decision to choose all of this as applicable to our scenario. Please understand why I am emphasizing to choose all or most of these components, because these are day-to-day expenses which we incur irrespective of the fact that either we pay taxes or not. By opting these options, you need to provide the bill or the other supporting proof to justify these expenses. And at the end of the year, in worst scenario, if you have short spent or even if you have not spent on the expenses, the balance unutilized amount would be considered as taxable amount, which anyhow will happen in case if you have not opted for all these benefits at the beginning of the year. So now onwards, whenever you get mail from HR regarding submitting the bills for FBP claim or the investment declarations, please do not ignore. Now let's discuss about the well-known allowances or reimbursements and tax planning with respect to each one of them. So first one, HRA, house rental allowances. I know most of us are very much aware that in case if we are staying on a rented accommodation, we get tax benefits on the monthly rental paid. But now I want you to pay attention on other related points which helps you to maximize this benefit. Point number 1. Do not hesitate to ask PAN number from landlord in case if you are paying annual rent of more than 1 lakh rupees. This will help you to maximize your tax benefit. In case if you are staying with your parent in their own home, you can enter into a formal agreement and pay rent to your parents. Why am I emphasizing on this is mainly due to 2 reasons. First, their income might fall in the lower tax bracket as compared to yours. Second, we often contribute to home for day-to-day expenses. So why don't we do some extra documentations and take tax benefits which can be done easily. Third point, some of you might have a question. What if my spouse owns a home? Can I pay a rental income? Personally, I would not recommend this approach, as in general, it is assumed by lawmakers that husband and wife do not share a commercial relationship. In order to prove the otherwise, it may be necessary to demonstrate that the other spouse has the resources to purchase the house and is just not mere transferring of money, which in terms defeat the purpose of our tax planning. Our second commonly known allowances is LTA, leave travel allowance. One of the common occurrences throughout the year is our travel for the various reasons. The good news is that you can claim the tax benefit on this by submitting your travel bills. However, there are few key points to remember while taking the LTA benefit. In this video, my goal is to maximize the tax benefits through travels, which is happening anyway. While the specific rules for claiming LTA tax benefits can be little lengthy, but are also easily available with just few clicks. 3. The other exempt allowances. Many corporations offer a flexible options where a portion of salary can be customized by individuals based on their requirements. These allowances includes the list like communication allowances, transport allowances, car maintenance, fuel reimbursements, food coupons, books and periodical allowances. It is important to note that, as mentioned in our earlier part of video, if no choice is made, all this would be considered as special allowances or a personal pay, which in turn is a complete taxable allowance. Now moving to the second pillar, tax planning with insurance. Section 80D allows you to secure tax benefits by opting a health insurance plan. While most corporations provide health insurance to their employees, still there are a couple of points which are worth discussing. 1. Corporations enjoy high discounts by buying in the bulk and get a reduced annual premium. No doubt, it's a win-win situation for both employers as well as the employee. However, the fixed amount of sum insured might not be sufficient for everyone's need. Now when we know premiums are low and also there is a possibility that we may not be fully insured, but there is a high benefit which a Section 80D provides. With a low premium, there is a possibility that we may not be sufficiently insured or may not have taken the complete tax benefit which a Section 80D can provide. A pro tip here is to opt a top up from corporate itself. By this, you can get insured for higher amount with a reasonable premium. Another bonus point here would be keep a track of general consultations which you visit during the year. A tax deduction of up to 5,000 rupees can be availed for this during the year. Furthermore, don't just rely on insurance policies. Engage in physical activities or just go out and play with your children. By doing this, you don't only insure in your health but also make a lifetime memories, which is an investment in itself. Now the third pillar, tax planning with investments. Now people will be surprised why the investments is the third pillar. Because I personally feel health comes first than wealth. So Section 80C planning. This is a critical aspect to consider. Many investment products in the market are sold with the tag that you get 80C tax deductions. While it is important to know that the total tax benefits what Section 80C can provide is restricted only up to Rs 1,50,000 per annum. So before choosing any product solely just for 80C benefits, let's evaluate these options. First, Employee Provident Fund. The employee's share of PF, which is 12% of the basic salary, forms part of 80C tax benefits. Point number 2. If you have a school going children, the fees which you pay for the schools or tuitions qualifies for 80C benefits. Point 3. If you have a home loan, the principal repayment qualifies for 80C benefits. So in most cases, even if two of the above options are applicable to you, most of your 80C benefit is already exhausted. If still there is an unused gap, you can make investments which are useful for your daily life, such as Sukanya Samruddhi Yojana, also known as SSY. When you are a proud parent of your daughter, it is wise to start an SIP in this scheme. It helps you to plan on their higher education or marriage expenses, which is unavoidable. Additionally, from the investment perspective, the returns what they provide are also quite lucrative when compared to other tax saving products. And you get the opportunity to explore the power of compounding. Second, ELSS. For individuals who cannot opt for SSY, tax savings through mutual funds can be the ideal options. Choose the amount that suits you best and start with small SIP. The reason why I recommend this ELSS option is here the funds are locked only for 3 years, which is shortest compared to all tax saving products. Moreover, with calculated risk, the returns can be highest compared to all our other tax saving products. Third one is SGB, Sovereign Gold Bonds. Excellent option to invest in gold while earning higher return, lower risk and government security. It is wise to allocate some share of your savings to SGB to diversify your portfolio. And last point is avoid PPF. Yes, why am I saying to avoid PPF is, no doubt it is also a good product. But when talking from a salaried employee point of view, who is already enrolled to EPF, now if we compare both of them, it happens is like in PPF, your funds are blocked for 15 years as well as the returns which is earned is lower when compared to the EPF. So what your employees can do is to choose a voluntary provident fund instead of PPF. So by this, with the same amount of risk, when you get a chance to earn higher rate of return, it's always a good decision. Fourth pillar is tax planning with expenses. Section 80G, donations. When life is going well, our elders often encourage us to make a difference by supporting a meaningful cause. This is not only deeply rooted in our culture, but also recognized by our lawmakers. But where should we contribute? The options are vast and varied. So in simple terms, we often tend our hands to religious institutions engaged in charitable activities or NGOs doing the similar activity. When you decided to make such generous contribution, remember to request the proper receipts to take a complete tax benefit. I also want to make a sincere appeal with all the humanity. Please resist the temptation of unethical practices by contributing it to political parties or charitable organizations through intermediaries in exchange of taking the full money back by paying certain portion under a table. Instead, let's be the person of integrity and contribute to the advancement of the nation. The taxes we pay bring hopes to millions of lives. Believe me, by fulfilling our tax obligation in ethical and well-considered manner, we become a responsible citizen and take pride of our contribution. You will witness the heartful smiles of our fellow Indians when our nation gradually grows. So this was my effort to bring the basic understanding of tax planning for the salaried individuals. And yes, there are many other options open for tax saving, but my intention with today's video was to bring the basic understanding of tax planning, which becomes a common foundation and suits for most of the people. Thank you. Have a nice day.